Brian, let's talk about what's going on in the market today. What's going on?
Well, grabbing headlines, it's a lot of the tech layoffs, which always grab headlines
Right.
for whatever reason. People like talking about technology. That's technology and finance. Funny how that works out, but people like those. Technology's been a market leader, so those have been sort of bellwethers. And when they do layoffs, they're in the thousands or even tens of thousands. So a lot of headline grabs.
That's right.
There, but
Microsoft and Amazon. I just read this morning or yesterday, there are 30,000 layoffs collectively.
yep, and obviously
Spotify
Twitter
just
did.
laid off 6% of their workforce, which only amounted to, I think, about 1,960.
Mm-hmm. Yeah, and from just a sheer job standpoint, the number is probably higher if you look at it weighted on income. But technology jobs and big tech is only about 3% of workforce. So if you think about layoffs being, even if it was 5% of the tech workforce, 5% of 3%, really pretty minimal as far as the overall economy goes. Now, obviously, you watch these things to see if it spills over into other areas. So if you've got a lot of tech layoffs and that's Silicon Valley focus, what's that do to the real estate? And California's, what if it was its own country, it'd be the world's 5th largest economy or something. So you look at that sort of spillover, but just from the sheer raw numbers of the tech layoffs, it's really not as big a deal as the headlines would indicate. So I thought that was pretty interesting that the tech and the big tech jobs is less than 3% of the workforce. So we'll see if that spills over to service, because that's the largest part of the economy, but not a big deal yet. Big deal to
What's
the
it doing to the
people.
market? What's it doing to the market, though?
Well, so the market actually generally likes the layoffs, right? Because what are you doing? You're investing in a company, and if a company is proactively removing unproductive, it's going to immediately improve their bottom line, right? Because they stop paying the salaries. But long term, is it a positive for the stock? And we'll see. Sometimes if there's massive layoffs, if a company cuts 90% of their workforce, that's an indication that they were um, obviously having some major issues there with the company. But
So from a stock performance standpoint, the market could view a round of layoffs as like trimming dead wood.
yeah, is sort of a positive thing. What happens now with this environment is, what they're saying is, you get a lot of these things as well. Pre-pandemic, they were here, or and before, so they're relating it back because a lot of companies really increased the size of their workforce during the pandemic, and now some are going back to that, and
Right.
so back to pre-pandemic levels or things like that. You see that a lot with stocks, just the share prices, but you also see it a lot with work levels. Salesforce was another one that had big layoffs. So
Can you give us a quick high level view of what the tech sector is doing in the market?
sure, yeah, we can do that.
And just while you pull that up, I'll just report some maybe notable numbers. Google 12,000, Meta 11,000, and this is just in 2023. Amazon 10,000, Microsoft 10,000, Salesforce 8,000, Amazon 8,000, Cisco 4,000, Uber 3,700, Twitter 3,700, Uber again 3,000, Groupon, Peloton, Carvana, Zillow 25% of their workforce. I'm looking at layoffs.fyi. I don't know how accurate this information is, so this was just a quick Google search. Yelp laid off 17% of their workforce. Coinbase 18% of their workforce. DoorDash 6%. So Shopify 10%. I mean, this looks pretty wide. And then they repeat some of the companies. Just looking to see if there's any other eye raisers here. So, I mean, I probably would respond because I'm in the tech sector, so to speak. I guess I'm in the professional services sector. I don't know if that's the same necessarily. I mean, the tech sector is more of software development and technology development. We're more super users and implementers, so that's a little different. But still, you said what the tech sector is, 3% of the overall workforce?
Yeah. Yep.
But to have, to have 25%, let's see, 50% of Twitter, 44% of Groupon, 13% of Meta, 5% of Microsoft. Those are big numbers. Those are a lot. That's a lot. Those are a lot of people. Put all those people in a room, and that you fill a stadium.
Yeah, for sure. Yeah. Yeah. I mean, to me, from a stock standpoint, I think if it's maybe between like 5 and maybe like 12, that's probably a comfortable layoff. I think once you get into 20% of your workforce, then it's like, ooh, there might be some deeper issues there with that.
Right.
Um,
So
with that
what were
company.
you going to report on what the
Yeah.
sector is doing?
Yeah, I mean, overall, technology makes up about 25% of the S&P 500. So a lot of people that are, invested in index funds will follow the S&P 500. So technology stocks, so we talk about the employment part of how much they make up, but technology stocks, are probably 20 to 25% of most people's portfolio. So year to date, technology stocks are up actually about 20, I'm sorry, about 8%, whereas the overall S&P 500 is up about 6. So a little
And a
bit
lot of these
outperformance so
and
far.
a lot of these companies are also in the Nasdaq, or no?
Yeah, yeah, Nasdaq is it's not mutually exclusive, so a lot of crossover there, but and Nasdaq used to be exclusively technology, but there's a lot of some banks and some other stuff in there too.
Right.
So